Good evening, Nick Inman from VolumeProfileTrader.com on Thursday, August 30th. Markets, starting to do the rollover effect here in anticipation to Bernanke's speech tomorrow. Kind of expect the expected, right? And that's why we got out of the majority of our long positions, not today, but yesterday. So we avoided this downfall here. Unfortunately, actually, I did have two positions out. One that was an absolute home run that I took off too early, and the other's still working. So we'll get into that in a second. But overall, let's just look at the S&P really quick. Back down to that 1395 level where we found a little bit of support today, but it ended up rolling over towards the end of the day. And what we're looking at now is a market that is struggling to get above its point of control. So just yesterday, Tuesday, and we'll just go with this whole week, the market, the point of control for the month, even above that level, has been support. Now all of a sudden we gap down below, and now it's a bit of resistance. So we need to watch that. We need to be careful for that, because what it's setting up for is in September a move to the downside if we cannot get it back above 1400. So let's pay attention to this and not take it off of our radar. Right now we have if you're still holding, you have two trades out to the short side. The first, which is an absolute home run right now, is QQQ 68 by 67 put spread. Now this trade was put on on Monday, is when I announced it, and the trade was put on for 20 cents. Now it's trading at, okay, just so you can see visually, it closed, let's call it 36 cents, which is in the middle of this spread here, and it got as high as 50 cents today. So remember, this was for 20 cents each, and remember, options trade in lots of 100, so it's really $20 each. Well, that went as high as $50 each today, and this trade was put on Monday. So we had returns at one point today at 150%. That is a great trade. Now, I took off the trade earlier today for much smaller gains than 150%, even smaller than 100, even smaller than 50. But that's not the point. That was bad exit. That was bad management on my part. However, it gave you the opportunity to take huge gains, and I think that is what is important. So that is one thing that is working this week. Also, what else is working? September, IWM, the Russell ETF, bought the 81 by 80 put spreads expiring in September for 35 cents each. Now this was done yesterday, and this trade, 35 cents, it's up, I want to say 7 or 8 cents. It's not up big, but on a percentage basis, it is. About, what is that? 20%. So you really can't complain too much about that. A pretty good trade that's working in your favor. To cover some trades that we covered yesterday, covered meaning flattened on, let's go ahead and check them out and see why we kind of got out of the positions. First things first, gold long. Now I originally bought gold down here at this 157 level. It was on Monday, so it was right around here, 157. Bam, up to the upside. Took profits somewhere in the 161, between 161 and 162. And then yesterday, on this bar right here, I guess it wasn't yesterday. Yes, it had to. Yeah, today's Thursday. So yesterday, sorry. On the first bar of the day, you started to get sellers coming in, breaking this support here. Why be a part of it if it's trying to go lower? Volume was good. You get out of the position. This call spread we had, which was September 164 by 167, we paid 85 cents. I believe it was 80. It was either 80 or 85 cents a piece. and took the position off for a 20-cent loss. So it really wasn't that big of a deal considering the payout was about 4-1. We only lost a small fraction of that, so that's good. We kept our losses small. That's what it's about. MasterCard, another one in which we got out. The reason why, because it wasn't breaking out. So, yesterday I said maybe I should have held on to it, but it looks like that was a good decision. Basically, ditch your longs. You can always buy them back, and that's kind of the philosophy I was taking. And the reason why was because the volume was so light here. I got into the position, and I did happen to buy a little small, but I got in the position expecting, if this market tries to push higher, MasterCard against its 1-year point of control, that's pretty good. That's a pretty good bet. I like the odds, but volume declining, it just wasn't something that was working out. So I got out of the position for a tiny loss. That's what happens. That's part of trading. Silver. This was another one. I got in. Guess what? I bought too high. I was, looking back on this, it's ridiculous. The breakout happened. We pushed higher, and I saw on a 2-year chart, which I'll bring up. This thing looks like it, and it still does. I'm gonna do a 2-year chart. It looks like it's trying to break out of this huge high volume area here. Let's see. It just looks like we have a huge base, and we have just consecutive lows that have continued to hold around 26 or so on silver futures, and then we had downtrending resistance, and I guess we're up to those levels now. I'm still a believer that a pullback and a bounce is something that you look for. I just am not comfortable buying that high. So what I do, I took a small loss, and I'll reevaluate the position later on. But I'm not too worried about this. I'm not worried about missing the trade. I'm being patient. I know that the opportunity will come, and when it comes, I will be on top of it, unlike this last time. Now, I happen to be on top of the gold trade that broke out, but the silver trade, I just missed it. And, that's my fault. And then I tried to buy it too late, and that was just bad management, but I did a good job at keeping my losses small, and that matters. All right, LinkedIn, it was a name I took profits on yesterday. I bought it. I think I bought it on the 22nd. 106.90. Well, guess what? It popped up to 109 or so, which has been resistance, and it's not worth it. Just not right now. With all the news coming in the coming weeks, whether it's Bernanke tomorrow, Draghi next week, there's a lot of news to come out, and I don't want to be a part of it. However, just to point out the trade, last month's high volume area, support or resistance here? Support. Now what do you look for? You look for buying bars with good volume. What do we get here? We get buying bars on increasing volume. That's what you want to see. It wasn't a huge trade, but it worked out to the long side, and that's what you want to see. So, we'll take what we can get right now. Very bad market right now, and we'll reassess later on. Euro, no change really. Dollar, holding this support level. Let's show you on an hourly chart. This point of control back in April. Guess what? Doing a pretty good job at holding, buyers are holding this level. Now we're getting, support, big buying bar today, and flat line. So we'll see if this retraces back up towards the point of control, this huge high volume area from this current month. We'll see if it does that in September. As long as it holds these levels, I think, overall, is the trend on the dollar higher or lower? And right here, right now, it's higher. You can even see it more on a 1-year chart. It's higher. And that's, from the buying standpoint, that's what you want to see. And you want to buy weakness. Here's our weakness. But with Bernanke coming, with Draghi coming, it's really not worth, you can step in front of like the dollar. And usually the best way to play that, if you wanted to play the UUP, just buy shares outright. That's fine. It's a slow mover, so it's tough. But usually, the best case may be to go out. I'm just using IWM as an example, and somehow give yourself a risk-reward ratio, probably through the use of put spreads that suits a market that's going to correct, a little bit to the downside. So, like for example, the 81 by 80 put spreads that we put on for 35 cents each. That's a good way to protect to the downside over the next month. Because let's say the market tanks over the next 2 weeks, those put spreads will probably be up 100%, and we'll go ahead and take our profits and move on. But that's kind of what we're looking for all the time, as far as the ups and downs, the fluidity of trading. So, really, not much else to say. The weekend update will be a little more in depth, just because we'll have a little more information depending on what Bernanke says and how the market reacts. And then we'll prepare for next week, which is a new month. We have jobs report Friday, next Friday, of course, and we'll go from there. So take care, have a good weekend, and I hope this week you didn't get chopped up, and if you did, you kept your losses small. Realize that if you keep your losses small, you'll do a lot better job of staying in the game longer. So take care, have a good night, and I'll talk to you tomorrow.